Hi guys, can you hear me okay? Yeah, cool. Sorry about that. Just had a bit of problem with the microphone connecting there for a minute, so no problem at all. We shall get underway right now. So welcome to the new trading week. Welcome to the Flow Show. Had a pretty decent weekend this weekend down here on the south coast. Bit of sun, which is always enjoyable. Nice bit of warmth, warm me up, warm my cockles. I hope you all had a good weekend, a good, safe and peaceful weekend. And we look forward to getting some good trades this week, some decent pips under the belts, and see what the week brings us. I'm going to start off with our usual news flow, look at the news and the bits and pieces out this morning. Start quickly with Australia and the election that happened over the weekend. A win from Labour, which was a bit of a swing from the government that was in play at the moment. The market hasn't really reacted to that. I was watching it at the Open last night, at the Interbank Open. No real change there from the Aussie dollar. It's a bit firmer today, part of the general risk mood that's going on. Perhaps the bigger news is that RBA's Kent said that he sees the neutral rate around the 2 to 3% zone. Now, we've been talking a lot about this neutral rate among central banks. It's really the rate at where they see policy getting to before then maybe pausing, or when they step back from that point and have a look at how rate moves are affecting the economy, and where they would like to settle rates for the longer term. It doesn't mean they can't go above the neutral rate, but if they do, that's where they'd want to get rates back to. So it could be a case of central banks overshooting their neutral rate to combat inflation, and then potentially to bring that rate down to their neutral zone, as they're calling it. So the RBA looking for neutral rate in the 2 to 3% zone. So obviously they've got a bit of way to go to get there yet. Looking over to China, nothing really out of there. Shanghai ports are reopening, or going to be reopening, as we know. A story I picked up last night from the Telegraph that I put in our newsroom in the Forex Flow platform was that it's not necessarily going to ease supply chains that much, because what it's going to do, it's going to create a big flood of freight and transport leaving Shanghai ports and then all traveling to the other ports. So then it's going to pretty much move a backlog from one area across the globe to all the other ports around the world. So that creates itself, it's a problem. It's just shifting one problem to another. So although there could be signs of supply chains easing, it's probably going to last a lot longer, because, as I say, these blockages are just now going to get passed down the line. All the other ports are going to have to deal with it. So potential issues going to be there. We've had US's Biden in Japan, and he's been speaking this morning. He's been talking again about potentially easing tariffs on China. This is something that Yellen was flagging a week or so ago, 2 weeks ago. What we know is that the tariffs they may be looking to lower or get rid of are on, small issues, small goods, nothing that's really huge in the grand scheme of things. But it's a potential sentiment change. You think it was a potential sentiment change, but in this pretty much the same breath as he said they may look to change tariffs, lower tariffs, he also came out and said that US would use force to defend Taiwan if there was a Chinese invasion. So it's given on one hand in the risk picture and taken with the other, really. And China's obviously responded to that, saying that it's none of the US's business. Taiwan is a sovereign part of China. And so a bit of banter backwards and forwards there. You think you get something easing one way, and then the rhetoric turns sour the other way. Russia, they cut supplies apparently to Finland and Lithuania, electric supplies. This was a company that provides electric power to both these countries. Both countries have been moving away from their reliance on Russian energy, like many other countries had, but there was a Russian firm that said they are going to stop electric supplies into these countries. So that keeps that picture bubbling over. The UK pretty quiet on the news front. What we're gearing up for here at the moment, or Boris is gearing up for, is what's called the Sue Gray report. For those that may not know, we've been dealing with this Partygate issue and whether the PM would get fined. He did get fined, and whether he would resign over getting a fine for supposedly eating birthday cake on his birthday, and all the other potential parties that have been going on. There's been over 100 other people fined, junior staff members, government workers within Number 10 and various other offices for various breaches of COVID. The police investigation has pretty much ceased into Boris, so he's not looking at any more fines at the moment. But this Sue Gray report is more an internal report. It's being run to see what exactly went on, an investigation across government, whether lessons can be learned and that sort of thing. So while it may not have any legal impact on Boris, it's potentially going to be very inflammatory for anything it contains that does put Boris in a bad light. I don't think it's going to be anything that's going to warrant him resigning, but it's going to put him under further pressure, both from the opposition and his own party, if there's bad news in there. So that's going to be dropping this week, really, for the market and for the pound, unless it's something that's going to drive him to resign. That it's not going to be really market watching, but there is that small risk. There is talk that might drop today, otherwise it's potentially tomorrow or Wednesday, but it'll come when it will come. Over to Europe, the big news really is this morning with ECB's Lagarde out earlier. Now, as we know, for the last couple of weeks, she's been her line has been end QE at pretty much the beginning of Q3, and then hike some weeks later. Well, today she pretty much came out and sealed it in numbers and a time frame. She came out and she said that she saw the end of negative rates by the end of Q3. Now, if we take the position there, the negative rate is the deposit rate. It's at minus 0.5%. If we're expecting the June meeting for them to announce the end of QE, that'll start beginning of July. The ECB meeting in July, I believe, is the 21st. That'll be where they announce their first rate hike. And then the next meeting from that is September, which is the end of Q3 month. So that's when we'll get the next hike. Now, if they're going to end negative rates, the market is pretty much pricing in that it'll go to zero by the end of Q3. So from here, it's 25 pip hikes to the deposit rate to get it from minus 0.5 to zero by the end of Q3. But it's the first time Lagarde has put it so clearly, whereas, as I said before, she was saying end QE, maybe we'll hike rates a few weeks later. So it's pretty much nailing the coffin for expectations. We've seen the euro obviously react to that, and we'll look at prices in a moment. But it's pretty definitive now. It's come from the horse's mouth, the head of the ECB. Market's ready now, gearing up. We'll get all the details in June. So from that aspect, it depends. There's still a bit of risk over the actual hike path. Just saying we'll be out of negative rates is one thing. Will they go a bit more? Will they start moving the other rates? It all remains to be seen. So there's still going to be a little price expectation going on there into the June ECB, while the market juggles around with what it actually means. Obviously, a really hawkish announcement will be that they're going to get to zero by September or the end of September. But also, if they insinuate that perhaps some of the other rates, the main refinancing rate, could start climbing, that'll be a boost for the euro. Conversely, if they just get back to zero and then say, well, that's where we're going to pause and we're not going to do anything else, that will be seen as a potentially less hawkish move that might put some pressure on the euro. So all to play for the June meeting coming up. This morning on the data, not a lot out. All we had really was the IFO from Germany, which was a little bit better, a bit more positivity after the dismal run it's been on, all these German business expectation numbers like the ZOO and the IFO. So a little bit of positivity creeping in there. Whether it lasts or not, who knows? But as we want to see these supply chains opening up a bit more, so that industry and firms can get their goods out. One of the lines from the IFO today was that 80% of retailers are saying they're not getting everything they've ordered. So that shows the problem with the supply chains. They also said that industry, some of the demand is now starting to dry up, and that's potentially to do with firms not being able to get the goods they need for their productions, for their produce to then ship out. So that can create a negative effect in GDP and activity, not because they don't want to do it, but because they physically can't do it, which again, that potentially means some catch-up activity when those supply chains ease. So you suddenly get a boost as everyone's trying to get their orders out the door when they finally get their input goods. But in the meantime, if that drags on a bit, it could mean we see further negativity for economies, Germany being one of them, because activity just grinds to a halt because people physically can't get their goods out. Just looking at the review or a preview of the rest of the week, the data coming out, just highlighting some of the numbers. We start getting the flash PMIs from tomorrow. They start from Australia, working all the way through to Europe, then through to the US. As we can see, all the PMIs coming out. That's tomorrow. On Wednesday, again, just picking the select numbers, we get durable goods from the US. That gives us a little insight into, again, the consumer side of the market, because durable goods includes things like consumer goods, washing machines, tumble dryers, you name it, things like that. That gives us an insight into that. On the 26th, we get the first revision from the US GDP. Not really a big number, big details, but that's something just to keep an eye on. If there's any improvement there, we get more numbers, if you like, more detail on the GDP to see how things are being affected there. Canadian retail sales coming out there for March, so still a bit lagging there, but another one to put into their rate picture to see if the consumer there is still happy and bubbling along. And on Friday, so also we have some, where are we looking at? Sorry, back on the 24th, we got new home sales in the US. So there'll be a number to keep an eye on there. Where are we? New home sales, 25th, 24th, tomorrow. New home sales there. Again, we've seen this weakness in the housing market. This will be another one of the main headline numbers that we'll look at to see if that's continuing across all the different housing data that we've seen so far this month. On Friday, we get the PCE numbers. So these are this follows the April US CPI. Then we get the PCE, which the Fed's main method of looking at the numbers there. So they'll be looking at closely. We also get the personal spending and income numbers. Again, another consumer related number there. To see, is inflation still entrenched? Is it going to ease off a touch? Is the consumer's income growing, slowing? Same with spending. So that leads us into Friday for the data view there, just as I say, highlighting some of the things coming out. Just looking at some of the other things to bear in mind for the week, look at the options. For those of you who are not part of the ForexAnalytix platform, this is what I put up on a Sunday night. I take a look at the option expiries for the week just to gauge if there's any bits and pieces in there that might give us an indication of which way the market might be leaning in terms of the option market, see where it potentially is getting busy. It's stepped up a bit from the last couple of weeks in terms of numbers. If we look at euro dollar here, we can see fairly quiet into the middle of the week, but on Friday we already got a large expiry there at 105, over just under 3 billion going off there, the 105 mark. Some of the other select options going on. Aussie dollar, we got 2.58 billion on Wednesday, but that's up at 73, so a bit of a way to go there. Dollar rand, a couple in there for Friday, bit of a wide margin there, 1806, 1.25 billion. And then at 1542, we got 1.6 billion, 1.16 billion. So there on Friday. Today's expiries, 128.0020. We're a bit away from that at the moment, but that's a decent one there, 2.8 billion. Bit lower down, nothing really much lower down below there, 127, only 465 million. Euro dollar, we've moved away from this 106 handle, but we've got 963 there. And just here we've got euro yen. Again, not too close, but it stuck out. We don't usually get option expiries of that size there. 139.50, there's 2.27 billion. On closer inspection, that looks to be a call put strategy at play, because there's about 784 million each side. When I look at the individual trades, I can match up their times of when they're trading, and every time there was a call put on, there was a put on exactly the same time. So around 784 million each side, and a call put strat there. So that's an overlook of the week ahead, what we've got going on. Obviously, these options for those in the room, I then put up the expiries each morning or the night before. So we get to see how the option levels grow over the week, how they define. If you look there, just quickly, that's the total strikes expiring this week. So the biggest strike you can see is at that 104 level. The next one is 106.50, around about the 4.5 billion mark. And as I say, then those are broken down into those levels there, so you can see how they're spread across the week. That's for ForexAnalytix subscribers. And then obviously, if you want to come and join us, then please do. I'll pop a link up towards the end of the meeting. Yep, Simon's putting in the FOMC minutes are due this week as well. They're not something really I pay attention to much anymore, because we just get floods and floods of Fed speakers as soon as the blackout's finished and as soon as the last FOMC has passed. You know, they all come out the woodwork. If we don't know what they're thinking by now, it's not worth thinking about. So yeah, it may contain some small surprises in there. There's always a risk, but it's really lost traction over the last few years. It used to be something that was watched closely, because we didn't get as many Fed heads coming out every 5 minutes and giving us chapter and verse. So there was often it could often contain some clues. There is still a bit of risk in there that we get something in the minutes that we haven't heard before. But nowadays, with the press conferences at every meeting, no one should be getting any surprises from the minutes, but it's there, so we pay attention to it. Although it'll be after I'm probably sitting having my dinner, so I'm not going to miss my dinner for that. Right, so we'll have a quick look at some of the prices going on here. Now, first thing is dollar yen. We've had another test of this zone down here. As you know, I was looking at this zone to see if it becomes the downside, the bottom of the range for this 127, 131 to develop. I took a long in there on last week when we hit that 127 area. My highest exit was at 128.18. I got stopped overnight on my trail at 127.40 overnight in Asia today. We got down to around about 127.14, I believe, in the low this morning. So it's confirming this bottom down here in dollar yen. It's confirming the support. It's pretty strong down here. What I'm not liking is if we come back and test it a third time in quick succession. As you can see, we got to move back up towards the 128, but we've slid all the way back down since. If we start getting multiple tests of this area down here, I'm going to be thinking about going with a sell stop underneath, trying to get the short break through the 127 level, because as I say, I don't like a price consistently or persistently testing a level. Every time it does that, it increases the chance of the break and potentially increases the volatility of the break. So at the moment, we've got a bit of a mini range developing again up towards this 128.20, 30 zone. So that's where you want to watch for now. We've got 127, 128, 2030. If we get a push back above that sort of area, then we're probably going to be heading up towards the 129s. That's the next resistance area. But as I've been saying for this pair, you know, if you don't want to get stuck in the middle noise here, then wait for these big areas, wait for the edges. If it does manage to hold and push away, we should get a move potentially right back up towards the 130s. Just stick to the edges. If you want to have some patience, stick to the edges. Maybe we get a move up to the high 130s. Then potentially you've got an opportunity to start some shorts. But in the meantime, keep an eye on this 127 zone, see what happens. I've not re-entered again. I'm not looking to re-enter longs again off this level. I'll see what the price action is like if we do get another test down here. The fact it held around here and not got down as low as the 127s again is a positive sign. It shows that the buyers who are in here are potentially protecting those positions, you know, stepping up just above the big figure, keeping the momentum on the upside. But again, if we do get a fast test back down to the level, it's going to make it a bit more cautious, and you know, I'm not going to be too certain about which way it's going to go from there. Skipping across quickly to euro dollar, big strong move here. Now we've had this break. I was speaking this morning in the room, and those of you who've been here a while know we've been looking at this 106.35-ish area. The first step has been getting back above the 106 handle. Now we've made a decent break above this 106.35 area, and we look to be pushing on. 107 is the next in line. I'm going to be looking to see if we start building support now at this broken zone. That's what I always look for when we get these break moves. I want to see that this level now holds as support. If it doesn't, that's going to indicate that this is just maybe a flash in the pan move, and we get back down into the range. 106 is going to be the next important level there. So 2 levels to look at from here. I was umming and ahhing about adding to my long position that I've got running at the moment from the low 104s. I did take some off earlier today at 106, pretty much first thing this morning. I missed that on Friday. I've now taken a bit more off at 106.60. As I say, I was potentially looking to add at 106 just to see if we could solidify this break. But before I got a chance to actually look at it, Lagarde came out, and the rest of his day is history. So from here, I'll potentially will look now to add, if I see this 106.30 zone solid, definitely the 106 area as we make this next step up. From here, it's all about 107, and then we've got the 38.2 fib. I'll just zoom out a second. So the next point, we've got the 38.2 fib of the early years move. That's down at 107.87. So still a long way to go before we even look to turn around this trend. You know, even this break here of this 35 zone, it's still pretty much a small step in the grand scheme of things. You know, even if you look back to when we're up at the 120s, the trend is definitely down. It's going to take a lot to change that trend at the moment, but it's starting somewhere. And as a lot of people in the room and maybe on the show here know, I've been favouring euro longs for a while now, and you know, we've had a pretty much big test of that 103.40 level down there. That's proved solid. I expect to see these big levels, you know, really starting to impose themselves unless we get some big news that changes that around. 105 is going to go back to being a huge support point again. But we don't really start to change the trend until we get above these high 107s, 108s. Then potentially we're looking at something different. And then we start hitting some of these other levels that we started seeing, 109, 40s, then into 110, 11s, up to 112s. A long way to go yet, but it's heading in the right direction, and we've got the ECB on board now. So that's one thing I'm going to be looking at. Quick look at sterling. Now I mentioned I've got these old fibs. When usually, if you take this yellow fib here, Usually when the price has moved down through these fibs, I usually take them off. I'm not one for reusing old fib levels, but they have been, in this case, they are levels within themselves. So I've left them on there for now. I'm probably going to take them off this week and just stick in some lines that go in at the appropriate levels. So 125 has been the key level in cable. We've been mentioning for a while now. We've had that break above. It looks a pretty decisive break now. We're going to run into trouble into 126. We've already had a little test up there. Naturally, it's been a prior S&R point, so it's a big figure. It's always going to have some action around there. But for me, the bigger number is up at this sort of 126, 30 to 70 area, purely because that's where we had a decent, strong double top up there on the dailies. It's also, if we take back, it's also a prior S&R point going back, all the way to 2020. So it's one of those levels of interest that I look at where it's potentially going to run into some problems. We're going to see some traffic in that zone. If we get a break above there, then again, we're looking at the year's move. The 38.2 of that is here at 127.64. So again, still a long way to go before we even look to start turning around this trend. We've got the wider move here, going back to 2021. From May onwards, the 38.2 of that is at 129.56. So even moves within moves within moves, trends within trends within trends, different legs, all can show different indications of whether the trend is changing. That's got a nice confluence there with the shorter term fibs of this move. So around that 129.50 mark is potentially going to be pretty important, as we can see, into 130 up towards the high 129s was the natural support. So it's going to be a big area up there should we get there, but a long way to go. 125 is your marker at the moment, the main level. If we stay above there, then we should get a push on higher. If we clear sort of 124.90, 124.80, that's going to spell trouble, and we're potentially going to be slipping back down to the 124s. So again, just watch the levels. That's what I'll be doing. Can we get through here? Can we hold above here? That'll decide which way we go from there. Aussie dollar, as we spoke about, looking fairly strong again. It's been a bit and ahhing, but we've got a solid break above that 70 handle. That should again become a decent support point from here. Some minor levels on the way up, around about the 70, 60, 80 area. We've got into the 71s. We're going to be hitting another zone, pretty much from 71.29s up to 30s, 35s. These are just really old zones that have been S&R points along the way. Got another one up towards the sort of 70, 80 zone. The 38.2 fib of the April move down is at 71.47. I'm not too keen on this fib because it is short. It is pretty short term. It's just over a month's worth of price action, but I've got it on there now because we are getting to sort of maybe 2 months. We'll have this position or have this pattern for. I only really like to use fibs over a decent amount of time. I'm not one for using a fib on a daily move or couple of days moves. I like to have a good bit of price action behind it. The longer the time frame, the better for me, but that's just the way I operate. So from here, you're looking at this 70, 65 area, 70 area. That's the first main point of support for me. But we've made this break into 71. So if you manage to hold on here, 71.09 we're trading at the moment. If we do manage to keep it solid there, we should get a push on up. Just looking at the short-term price action, 71.20 is now the resistance after we had the overnight high, which was up to nearly 30. So just the intraday price action here, 70.80 is probably your first line in the sand before we get down to that 65.70 zone. But as I say, 71 is the number you want to keep an eye on. Let's look around at some of the other pairs. Dollar CAD still pretty much holding below 128. We are getting little mooches above, but nothing significant, and we're not managing to hold it. So it keeps the short-term bearish pressure on, but we need to keep an eye on these lows. If we get under these lows, start breaking these lows, then we're going to be heading further south. But in the meantime, it's looking a little bit consolidatory at the moment, if not just starting to shallowly trend a bit lower. But lots to play for in that. Oil, just a quick look at that. Still remaining fairly bullish on the intraday trend, at least. We had all the rollovers, and that's all gone now, so it's starting to creep back up again. Again, if we're going to see China opening and you know, industry starting to, the wheels to start turning, that's going to be bullish for oil. Now let's look at stocks quickly, because we had all the OPEX on Friday, and this now looks very much like an OPEX move. You know, the option expiries, the rollovers, you know, a very solid move on Friday. Stocks were actually looking crap, and then we had the bounce late in the day. We've seen that further build in the early part of the day. We've seen that through Asia. So all this price action is looking very much tied to those option expiries. And as we mentioned, it's a bit like the end of month fixes and the end of month moves we get in FX, where the market can just suddenly trade what it needs to do for the end of month, in this case for the option expiries, before then getting back to the fundamentals and the real stuff that's happening in markets. So if you manage to catch that dip down there, again, it was a fairly decent fib that we hit there. Just taking it from the virus bounce, we hit that 38.2 fib, and it's been a really solid bounce from there. So at the very least, it's confirmed the support down there. It's confirmed the technical indicator via that fib. So that gives you a marker now of where support's going to be sitting into that 38 zone. If we bust below it, then we're potentially heading lower. But now we've got a potential for a decent range to appear between there and this 41 handle that a lot of people in our chat room has been looking at. Quick look at the yields. US 10 still hovering around that 2.8% mark, not really building, not really falling. Market pretty happy with where the Fed are with rates. Nothing really to change their mind at the moment. We have been seeing these signs of some issues in the market, particularly with housing, the consumer sentiment, that sort of thing. That's going to be an ongoing picture, and we'll get more data on that. As I say, particularly the PMIs this week are going to be an interesting to watch, to see whether we're going to start seeing some of this general economic weakness coming into these industrial numbers, manufacturing numbers, services numbers, picking out the important aspects like unemployment, like pricing, inflation, prices input, prices paid, prices received, that sort of thing. So that's a pretty good, pretty much an overview of what's happened this morning, and a look at some of the price moves, view of what's coming up this week for you to note and keep an eye on. Let's take it over to you guys and girls and see if you've got any questions. Let's just have a little scroll back. So Chris, you want to have a look at dollar Swiss? Let's flash that up. I'm not sure I've got too much tech on this chart, if at all. Because I'm slowly transitioning from my MT4 charts to trading view, but I've got so much going on my trading charts. It's a bit of a job to get everything over. Now we also had that big push up through the one level, which hasn't held, and we're all the way back down. Bit of Swissy SMB in the mix with this one as well, because we had that, what people are calling a shift from Jordan about the potential for using policy tools to combat inflation. The market got a bit out of its pram in EURUSD, particularly, as we know. The S&P meeting is in June. They only have quarterly meetings, they only have 4 a year. So they've got a meeting June the 16th, I believe. So we're going to be looking at that. But really for this one, it's looking very much like a bit of dollar weakness, more so than Swissy strength, based on what's happening today. We've seen the dollar weaken across the board versus the others, Euro, Kiwi, that sort of thing. Which reminds me, we've also got the RBNZ. Nearly missed that one off. We've got the RBNZ this week, so we'll have a look at Kiwi in a moment. But for dollar Swiss, you're going to be looking at down towards this 94 area, perhaps, before you start seeing some real decent support. If we start seeing it coming in around this sort of 95.40 area, that's been a prior SNR level, so that's one of the areas to look at if you want to be catching the knife or trying to build on longs. That's the sort of area you want to look at. A break under there, you don't really need to be too tight with it. But if we get back to this sort of 94s, low or high 93s, that's sort of your main area of support at the moment. You got anything particular you're looking at there, Chris? If you want to let me know, we can have a look at that in a bit more detail. Stephen wants to look at Guppy. Yeah, solid move. I'm not sure why the pound is so bullish this morning, particularly. I mean, probably the main reason is because it's got this additional volatility at the moment over a pair like euro dollar. So where we saw it falling really quite rapidly, it's natural to see it bouncing just as rapid when the market turns around. But this 161 area looks to be important. Then the 162s just on a wide basis. The support reconfirmed down around this, 145, call it 50-70 area down here. We had the break under. Then when we got back above, it started to find support into it again. So again, potentially building a decent range. What you'd want to see is a break above this 161 and then these highs around the high 161s at sort of 70, call it 80 up here, and we'll get a push further up. Again, Stephen, if you got anything particularly you want to ask about this pair, I don't know what you're doing. Are you short? Are you long? Are you looking to get in, get out? Let us know. I don't trade Guppy a lot, so apart from giving you, my view of the levels, I don't have a particular view on that one at the moment. But if you've got something that you're looking at particularly, then obviously happy to discuss that. Yeah, Artem. Yeah, so the RBNZ, I was just looking at this earlier. I was looking at the rate expectations. Let me see if I can get those up for you quickly. 2 seconds. Yep, so bear with me 2 seconds. I'll get the rate expectations up that I look at often so you can see those. Let's have a quick look. Boom, 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 boom. Here we go. Okay, so this is just a quick snapshot. So this is from the OIS pricing. It just gives you an indication of what the market's seeing, how they view rates. So really, the probability of hiking rates, it's got to 1.75 at 100%. So the market is pretty much, the market price is saying we're getting a hike this week, which is pretty much nailed on. Although it says 1.75 there, if we look at the implied rate for May, I hope you can see my hand floating around there. It's actually got the implied rate for interest rates at just over 2%. So that indicates more of a case of the market expecting a 50 pip hike. which has been the market pricing for a while. But we did have the one of the RBNZ bods coming out and saying that it's not a formality that it's going to be a 50 pip hike, or insinuating that the economic activity that they've seen doesn't mean that a 50 pip hike is going to be nailed on. So there's potential here for a little bit of price movement. If they hike the 50, there might be some who knee jerk the Kiwi higher, as I say, because the RBNZ had pulled down those expectations a bit. But certainly some in the market are expecting that 50 pip hike. Conversely, if they don't hike the 50 pips, then we've got some scope for some disappointment there in the Kiwi. Again, looking at the price action here, pretty much following the same as what we're seeing in the other pairs, more dollar weakness than Kiwi strength. But the RBNZ will be playing into that. Likely to see that maybe the price, stagnate as we get closer to the RBNZ. What I'm going to be looking at here is the mood of the market. The mood at the moment is fairly bullish for the Kiwi. So if we do get some disappointment there in the Kiwi, but it's not too destructive, say the RBNZ isn't as hawkish as they expect this month, but maybe they still signal that they're going to continue their path, and still everything is on the table. That might be a dip worth looking into, because it's going to go against what the current trend is. We got solid signs of a bottom down here, pretty much like the Aussie dollar, like the euro. It seems like we're not pushing really lower anymore. The end of the downtrend could be coming to an end, so that's going to give you a bit of more conviction to buy those dips, as opposed to rally selling in these sort of pairs. So that's looking for the RBNZ, and we can look at that in a bit close detail as we creep up to that. Nick, at what price level would you call a change of trend in this last leg down, euro dollar at 109? That's why I look at the fibs, really. The fibs are the technical indicator, the visual that I like to use, that show whether we're getting a change in trend, because it's pretty straightforward. If we've retraced 50% of the move but we can't break above, for example, this is the wider move Fed this year. If we can't get above those sort of levels, for me, it just tells me it keeps the trend in play. There's no reason to see the trend change now. Obviously, depending on the scale, some of these moves can be really big. So coming off this 103.40, just get into the 108 handle, 300, 460 pips. That's still a lot of pips. And if you can catch some of those, all the better. But in terms of the wider picture, and for this is a weekly chart, I haven't even got the fib up from the 120s. I don't think that comes in till somewhere in the 111s. So it depends on your context. It depends on your scale, what time frame you're looking at. You can use fibs on 4-hour charts, hourly charts, just catching what the trends are like intraday. That's fine and dandy. But for me, taking a wider view and potentially looking at where the trend is changing, it's the fibs. That's my main indicator. That, and the 50 fib is important. Get above that, we got a 80-90% chance that the trend is actually really going to change. And the 61.8 for me is the line in the sand. Now, depending on the time frame and what I'm looking at, will depend whether I'm looking to trade them or not. If I'm going with the flow, for example, euro dollar, I'm long. It's the fibs is where, for trading wise, I'll be looking at potentially that's where the next problem is going to lie. So that's the next speed hump, if you like, in my way. So what am I going to do if we get to those levels? Am I going to take some profit? I'm going to take all the profit, take some profit, look to see if we break. If we don't break, maybe I'll tighten my stops up below, because if the trend is going to remain, that could mean that we push all the way back down again. So it's not so much about entries, it's all about how you manage your trade if you're in a trade, and what you use these levels for as you go through a trade. You can't just ignore them because you think, oh right, well I've bought at the bottom and I want to get out at 108. 109, 110, whatever, you can't ignore the technical levels that stand in your way, because they give you an indication whether the price is going to get to your target or do what you want it to do. So that's what I really use the fib for. I say I can use them to trade on the bigger time frames, but I also use them to manage my trades as well. Arif, Eurodollar, yeah, I think we've done that. You were short, so you had to close. Oh, sorry to hear that, mate. There's always another trade, you know. Don't get too upset about it. Brush it off. Pick yourself up and get on the next horse. Right, unless there's any other questions coming in, let's have a quick look through. I think we'll call that a day today. Lots going to be happening this week, no doubt, and we'll be talking about that. Kay's off today. He's got a well-earned day off, so he'll be back with me tomorrow, unless he decides to go swanning off down the beach. Such is the luxury of living by the coast, but we should see from him tomorrow. Until then, thank you very much for joining us on the Flow Show, and I wish you good luck this week and today, and we'll see you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.